Good afternoon from the For the CME. This is Chris Robinson with your Traders Exclusive comment for today, Thursday, November 8th. Well, it was USDA report day. I talked about that last week. This report did not fail to give us opportunity. A lot of volatility once that 11 o'clock number came out. The interesting thing was, domestically, it was actually pretty friendly should have been friendly for prices. In other words, higher prices. What do? They cut the yield, they cut the size of the crop for both corn and soybeans. However, the USDA adjusted the usage rate of corn much lower, and also for soybeans, they finally addressed the drop in exports by quite a bit. You can dig into the actual numbers. The gist of the story is, however, that the size of the carryout was big enough, despite the fact that they lowered yields and lowered the size of the crop. The size of the carryout grew because of the decrease in exports and the decrease in usage. So that was the number one take out of the first 10 seconds of the report. Then, when you dug a little bit deeper, it was pretty interesting that our friends in China kind of threw a curveball at us. And what does that mean? Well, the worldwide carryout for corn jumped tremendously. Apparently, the Chinese decided to let the world know that they had an extra couple 100 million metric tons, about 5 billion bushels of corn. And the market saw that and really ran with it. It was very negative. Corn had a 15-cent trading range. Wheat also was pulled lower, about 15, 16 cents. Soybeans were down about 20 cents. That was in the first hour after the trade. But true to form for USDA report number, once people dug into it and thought about it, we ended up coming back unchanged on the day. So these reports are great generators of opportunity, especially when you have trading ranges like we saw. And we won't get another one for another month. Now we'll see. Today's Thursday. I think what's very important is how we settle tomorrow once people dig really further into what these numbers are and what they mean. As far as what the deal happened with China, that was surprising that they came out with this information. But for the last 15, 16 years, China made the decision to be self-sufficient for their corn production, but they were going to use the rest of the world to make up for their soybean production. That's the decision they made. They wanted to have their own corn, but they were willing to import soybeans. That's sort of all flipped here now. You got to wonder about the timing of this announcement on the part of the Chinese, that they suddenly found all this extra corn. But when you look at it, I mean, we don't really send a whole lot of corn to China anyhow. China uses most of that corn itself. So, and I think the market recognized that after an hour or so of really thinking about it, and that's why you saw the prices recover. So, all in all, it was a pretty friendly number when you look at domestic U.S. production. However, the carryout is really what hammered prices. Moving forward, we're really not going to have a whole lot of more information. The next big report really comes in January, and so this may have been the last hurrah for the grain market as far as volatility in 2018. If you're looking for help with your hedging, with your marketing, with your trading, I've got a little over 30 years in the business. Look me up. I'd love to work with you. This is Chris Robinson. Have a great day.